that 200, when it comes back into it, high odds, high percentage, it will soon, consolidate like it did here, or sometimes it will just hit and bounce off that 200.
Hmm.
Okay. But let me tell you what I would tell my 9 year old. Well, she already knows this, but this is what would happen. She would know if, G Joe, that's what they call me.
Uh-huh.
If I had to be out of country or something and something happened, when we get uh, let me go to Apple. The reason why goes because that might have, let's use a real stock, okay? And everybody's heard of Apple. Every institution, every hedge fund, every mutual fund, whatever, has Apple in it, because if you don't, and there's a few others too, but the reason why I'm talking about Apple is that, uh, a huge company, yada yada yada, but when people get their prospectus or the quarter reports, they don't see Apple on there, and maybe, Netflix, Disney, what I'm saying, just some of
Right.
the trendy, cool stocks. They're going to be asking why. And if you don't have a good answer, which there really isn't, they're going to take their business somewhere else and you're going to get fired. So everybody's going to have a little bit of Apple, in their
Mm-hmm.
portfolio. So that's why I'm using this. And this is the most traded stock. And I say all that to say this most traded stock, probably in the universe, so on and so forth. And the same thing happens here. You know what I mean? The
Mm-hmm.
the movement and stuff. So anyway, here we go. And what we look at, what I was referring to earlier, this one little pattern, the 20 simple week. And the reason why I'm using the weekly, or you can use the monthly, either way, for career people, people with kids, people with, with a real life, other
Right.
than looking at the charts. Okay, when price starts getting back up and over the 20, and this is same with the daily, and people can pull up their own charts. There's free charts out there on the internet, and they can look at this and other stocks, themselves, just to see how it works. But anyway, here we go up and over the 20. So you start scaling in, and that's what I was saying. We teach our people not to, go all in. If you have 10,000 or 20,000, don't throw it all in there. And really, the easy part is buying. What's hard is selling, or knowing where to sell and how to sell. Okay. So to buy, 10, 15, 20%, whatever your risk management is, whatever you're comfortable with out of that portfolio of money, risk capital that you have. Now, another thing that's 100% true. Okay, we talked about the 20 and the 200 come together
Mm-hmm.
100% of the time, they're going to split. Another 100% true situation is that when price gets far and away from the 20, is either going to trade sideways or sideways and down and let that 20 catch up. Okay, so let's say you just pull up a chart
Well,
and
let me stop you. When you say
yeah,
far and away, how what kind of percentage are you talking about? That if it goes above the 20?
well, it's just the time, depending on what chart you're on. Like the weekly here, obviously, all these are 1 week of price action. So that's a pretty good distance, which is going to be different than a daily chart as you're getting far and away. You know what I'm
Mm-hmm.
saying? So
Yep.
you kind of have to, and timing as well, like we talk about in sports. Last time it hit the 20 was back here in this particular screen, was in July of 22. And then, we started getting far and away from it. And then, so that sooner or later, 100% of the time, you're going to come back into that 20. So these red candles here, we got we got a well, a particular type of trading system that lets how, when, and where to start slowly scaling out. And what we'll do is this exponential. That just means it moves a little bit faster. It's the 8 exponential moving average, or you can use a 10-day simple moving average. Okay, and those are just, again, 10 days the average closing price over the last 10 days, or 8 days here exponentially. But if you start, coming down, crossing the 8 under, see how we came under the
Mm-hmm.
20, and this red candle closing that, man, that's almost. nothing's 100%, but that's like an 83 to 87% chance you're going to continue to the downside.
So you're
Okay.
basically trading on like percentages, like poker hands. Um, you
Well,
you look at the cards dealt, and then you act based off of
right.
probabilities.
Yeah, exactly. And most of the things that we do, and I'm not exaggerating or anything, the plays, the techniques that we, uh, you know, teach people to do, they literally have an 83 plus percent probability of success.
Hmm.
I know that blows people away, but yeah, Wall Street, the guy in the retail center, in the strip center, where you go in and they show you all these pie charts and stuff,
Mm-hmm.
and then the pundits on CNN or CNBC, whatever, they don't want you to know the simplicity of all this. And what I mean by an 83 to 87% probability is that if you have, the secret is having two or more factors on your side. And what that means is, like in this situation, a bullish engulfing candle closing up and over the 20 that also takes out a previous candle or candles. Okay, this right here is a 80, 83 plus percent probability of success, moving to the upside. And then as you come up, and there's really not a like a percentage. Like I could put a uh, price range, like from here down, like this is, like 17% above it. When you start getting the teens, and higher odds, higher probability you're going to be, pulling to the downside yet again. And I'm trying to, you know, tell people a lot of things in a short period of time, and I don't
Sure.
want to, confuse people. But as you're basically, going back to the granddaughter, hey, when stuff starts, big red candles, as simple as that, red, green, a color change. As soon as they start trading or closing on the 20, start scaling out, 10,
Mm-hmm.
15, 20%, whatever we had agreed on previous to me, leaving or whatever. And we talk about markets, not crashing overnight. They really don't. They show you signs. They show you potential, uh, you know, uh, weakness before they get there, and just putting a little trend line there. Most times they'll break on the third. They'll bounce the third, hit the fourth or fifth. They'll start breaking down, and then you start making high, lower high. I know I'm not
Yep.
maybe talking over people's heads now, but just a few little techniques, and then also time counts. See, 1, 2, 3, 4, 5, 6, and look. I mean, this is the apple. This is it's seven because okay, 3, 5, 7, and 9. The closer you get to 9, again, higher the odds, higher probability you're going to get a reversal candle. Like if it's green up, you're going to get a reversal candle coming down.
And
Or
these candles represent days or weeks.
oh, right now, what we're looking at is weeks right
Okay,
now.
gotcha.
Just a slow reason why, and actually that's what I would have her use to scale me in and out of my retirement account, so to speak,
Gotcha.
because it's slow. Excuse me, slows everything down,
Mm-hmm.
takes out all the noise. Okay, and like the daily here, see all that. That's kind of that. Now, once you get good at this, the same thing's going to happen on the daily.
Yeah.
Uh, but we're just slowing it down on the weekly in order to be able to see it, and a person not have to look at it constantly, day in, day out. You know what I mean? Like,
Right.
like a professional person, you know every Saturday morning or every other week, get on there and take a look, kind of see where you are and stuff like that. And it even on Bitcoin it works. Okay, the DXY here. Let me show you the perfect example. DXY, U.S. dollar currency index.
Mm-hmm.
1, 2, 3 hits, and guess what? The fourth. Here we go. And then that's another thing. Assets will do. Even the dollar, it'll come back whenever they break a a support zone or resistance. But right here, support, support, support it, bounce, support it, bounce, so on and so forth. Broke under it, it'll come back to what we call the scene of the crime, test it, and then, the rest of the history here. Okay.
So let me ask, when you said the 20 and the 200, once they come together, 100% of the time they're going to separate. How do you know which direction they're going to go, up or down?
Oh, you don't? You sit on your hands and wait for
Okay.
the direction. Yeah. And
And if
there's a
it
lot.
if it confirms a direction, that's when you assume that's going to continue to go up or continue to go down.
Right, exactly. Let me show you, even on that was the dollar. Let me show you on silver. See, it works on everything. And see right here, this consolidation zone, this is for
Hmm.
our Patreon members. And I'll go ahead and give give it, give your subscribers the deal because everybody's looking at silver and gold and stuff. This is the micro futures. And we're in what's called, let me take this off. Where'd it go? Okay, inside bar. And to the untrained eye, I just looks like a bunch of scrambled eggs up here. Okay,
Right.
but what you're in inside bar, this one green bar, everything is trading inside. Boom, 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 boom. Now we wicked over it. That's fine. That doesn't matter. We had a close pretty close on it. Wicked under it almost here. Anyway, what we're doing, we're sitting on our hands. We're not getting. That's how people get whipsawed in and out of the market right
Hmm.
here. Okay, and it just looking at some of these techniques, and then once it breaks out, and that's why I have it on there for our Patreon members to be able to more clearly see it. And we break above this red dash line that is significant resistance, obviously. Now, if we break out and have a real nice clearing candle up here, above 2450, then, we'll go all in, so to
Okay.
speak. Or
Gotcha.
if we break down, we'll hit the sell button and short it on the way down. And then as we're shorting, we're making profits because when you have physical silver, like we both do, you can't uh, mail it back, to the you know people that you bought it from and then them short it. I mean,
Right.
once you have physical, you need to keep it. But that's why we use the micro futures. I can control. This is going to blow you away. I can control 1,000 ounces of silver for $2,054.
Hmm.
Okay, so you can imagine what type of holding just one contract and knowing how to work these charts, what we can do, and how we found this is not the bottom, but we came close to it. See again, this trend line here, one, two, three bounces here, and then the gold arrow here was what? An inside bar. Everything trading inside this bar, and this was a 83 to 87% probability that silver was breaking out. And most times on these sideways consolidations, it'll happen on the fifth candle. One, two, three, four, five, breakout. And then we cleared. I put this here so people could more easily see it in our group. It closed above it, and then we had a two down, one up, another huge 83+% probability continuation, two down, another two down. But see, that closed inside that green candle. That's the trick, okay? And then there were other places where we scaled in, but you can see it all started here, and then this is where we are now. So it works commodities,
Sure. So
everything.
let me ask you, where do you think, if you're looking at like the S&P, the American economy, what are the charts telling you, for 2023, if anything?
Okay, well, first of all, this is a SPY. This is what most institutions look at, hedge funds, even, groups that uh, trade metals or whatever, kind of get the pulse, the feel of the economy. They use the SPY as simply the ETF for the S&P 500. And this is the daily chart on here. And as you can see from our all-time high, this trend line coming down, we've hit it one, two, three, four, five times. So each time we hit it, it's kind of like, the police department banging. I don't know if you ever experienced that, but the police department banging on your front door. Sooner or later, they're going to, take that
Hmm.
piece of equipment and knock it down. But anyway, but see right here, consolidation. and then breakout, and you were over the 20. So we had a nice little run up, right there. But what we're looking at, so long, okay, first of all, this is bearish. Let me take everything off to clean it up. I like the charts as clean and, precise as possible. Anyway, price, as you can see, is under the 200, which is bearish, and then the 20 is under the 200, which is bearish. Okay, the 200 is that purple line. Okay,
Mm-hmm.
now on a little bit of a positive note, we have the price above the 20 now, and we're going to have to make. Now, if you look at it, going back to the COVID, slam down. If you look at it like this, kind of pull back the chart, we've had a nice pullback, but still, if you look at it like this, it's really not that bad.
Yeah.
Now, yeah, your IRA, 203B, 401k, whatever, all that is definitely letting you know, we've had
Right.
a pullback, but it depends on, again, when you got in, that's another thing, that, but if you just started dollar cost averaging this year or last year, yeah, you're shaking your head. You're going, man, what's wrong?
Right.
This is not working, and that's why. And it might take a few, quite honestly. And I don't want to, I'm a positive person, but it could be a few years before we work ourselves out of this and the current. And you're the expert on that. The economy issues. And what's going on, with companies and the layoffs, and everything else. It might take a while for us to, I'm talking years, to work our way out of this thing and start pushing to the upside. But we'll definitely be able to catch these, little short-term
Gotcha.
rallies to the upside. So it's hard to call it, but the way I see it, and I don't want to get into your part, but the federal government, uh, especially here in the U.S., has kind of boxed themselves in the corner. They
Yeah.
may need to continue to actually do the QE thing, quantitative easing,
Yep.
in order to save the markets. Since the dollar, see, they're getting hit in both directions. And correct me if I'm wrong, please. I'm out of my
No,
wheelhouse.
you're correct.
But the
Unfortunately.
dollar, yeah, yeah, the dollar's getting slammed, and that's one cornerstone. And then the market, the stock market's getting slammed. It's another cornerstone of having, credibility in the world markets.
Yep.
Hey, we have the best currency we have. So they're going to have to pick a side, so to speak. Either, and I think they're going to save the dollar. Whatever they got to do to save the dollar, which means, we could see more downside in the markets. Now,
Hmm.
just because now, if the market,
That means raising rates continually.
yeah, yeah,
Um,
which is going to hurt a lot of
yep.
people.
Yep.
Yeah.
Because a lot of the market, and this is why I think it kind of blends pretty well macro and then looking at these micro trends, is if they have to save the dollar, what does that do to credit? It raises the price of credit, and since our economy is run on credit, you can do the math. But you can ride these waves. What it sounds like,
Mhm.
if you understand how the charts